Welcome to Giving You More Than Numbers, CASS's business support podcast, your go-to resource for practical business advice and expert insights.
Hello, and welcome to Giving You More Than Numbers, CASS's business support podcast, where we break down business advice into practical, actionable steps for SMEs. I'm Paul Barnes, and today we're tackling a crucial topic, making year-end accounting stress-free and setting up for success. I'm delighted to be joined by John Moore, Director of Fruition Accountancy, and Andy Horvath, owner of Horvath Accountants, who'll be sharing their expert insights and real-world tips. Right then, let's dive in. Thanks both for joining us. And if you could first just give me a little bit about you and your firm so that our viewers and listeners can know about you. So, John?
Yeah, absolutely. Hi, everyone. So I'm John Moore. I'm one of the two directors of Fruition Accountancy. We're a practice. We've got 31 staff, and we've got two offices in both Stratford-upon-Avon and in Lichfield. We came together with my partner during COVID, and we've been going from strength to strength. We very much are looking at owner-managed businesses and entrepreneurs. All of our advice and direction is all to be with entrepreneurial stuff, as well as doing a lot of work with charities and property owners.
Brilliant. Thank you. And Andy?
Hello, everyone. I'm Andy Horvath from Horvath Accountants, set up 5 years ago, just as COVID started. It's just me in the practice based in Birmingham, and like with John, owner-managed business, small family businesses, give them the help on their statutory obligations as well as their tax obligations.
Fantastic. So actually what we've got is quite a medium-sized accounting firm with staff, and then Andy sort of looks after it under his own steam. So brilliant. Okay, so let's tackle some common year-end challenges that you see as accountants, and let's deal with the big red herring in the room. What's the biggest single mistake that you see small businesses make in that run up to year-end?
I think for me, if you'd ask for a single thing, it's giving information in a timely manner, because we have a real problem where everyone leaves it to the last minute, and then the kind of stuff that you get is just really difficult to work with. So communication and actually allowing them to really believe, that you realise that you actually need information to be able to produce what they want.
Yeah, so
and then what happens is that it's all very last minute, and of course we produce some lovely numbers for them, and they don't like them. Well, that can't be right. But it obviously is right, or they have not given us the information. So for me, it's all about time.
Okay.
And getting them in a lot earlier.
Yeah. So actually giving you the tools to do the job a lot earlier, a lot quicker, and then I guess we can be more effective in how we can support that business.
Yes.
And Andy, is it anything different?
I would agree with John. It is, it's always a time base. We're always up against time with filing deadlines. And really, I think the clients are not aware that, if you get proper information, you can give better advice, where normally we're looking back rather than forward. And then, of course, as John Fine rightly says, there's always the surprise that they didn't anticipate. And as well as that, sometimes the records are not in a meaningful position to work. So you have to go back and do extra work.
Yeah, I think sort of we support accountants from a bookkeeping perspective primarily. And the biggest mistake that we kind of see in that preparation is bookkeeping accounts. It's a necessity. It's a need. And there's never been a reliance on how important it actually is. And there are loads and loads of firms of accountants out there that are not proactive. I mean, I'm lucky enough to work with accountants that are really proactive, and we've got two really proactive guys in the room. But that ability to get data early means that suddenly we can earn our fees and more in terms of value for a client. So that said, how early should a business start to prepare for year end?
Ideally, in month 9.
Okay.
Because as always, you would like to sort of plan and have no surprises really. So, if the company's having a good year, there's certain tax planning things you can do. But of course, if they come after the year end, you can't do that, and it's gone.
Yeah.
So, I think it's getting clients aware that if we can get correct information on their system, we are more able to help them and most likely give them the service that they want.
Yeah.
I think I'll probably take it a little bit further. I'm a massive believer in planning, and I'm a massive believer in actually having real-time information and allowing you to actually work with the client throughout the year. So for our clients, we do quarterly meetings with them so that we're always on top of them. So yes, absolutely at month 9, but also at month 3, month 6 as well. So we're kind of aware what is going on. And it also gives them the opportunity to be able to have a conversation with us. And the big area, if you don't do that, which we often find is a problem, is stock, because so many of them, you contact them after the year end and we say, well, assume you took your stock. We stock. So yes, so that's that for some of the bigger clients that holding stock. That is a massive thing. But for tax planning points of view as well, there's things that Andy says we can do before the year end that we can't do after the year end.
Yes,
so you've got to be on top.
Yeah, such as just obviously we potentially have got listeners and viewers that don't get that advice during the year. It's that after the event. So what sort of things would I'm going to call you proactive accountants and advisors? What sort of things should they be asking of their existing accountant, or potentially then looking to move to someone that does offer that stuff? So what type of things come up in that pre-year end?
How long you got?
So 20 minutes.
No, I mean, I think it's really looking, being able to say to a client, hopefully they're using cloud accounting or something, so we've got an idea of what the profitability is going to be looking like. That gives us 3 months to actually say to them, and say, right, your tax is going to be somewhere in this region, but there are a few things that you can do to make pension contributions. Yeah. Okay. You might be thinking about buying some assets of some description. Well, why don't you do it before the year end rather than after the year end?
Yeah.
And many other things that you can just add in at that late stage, or relatively late stage, which you can't. Yeah,
there are some givens, aren't there? So working from home, if you are home based, that's a retrospective. You don't need to plan for that in advance. But like you say, there are others.
And dividend planning as well. At the moment, you can do that. I'm not saying you should, but you can do that after the year end as well. Yeah. But actually for year end, it's kind of looking at expenditure really that can go into play. Looking at, do you pay someone a bonus?
Yeah.
And this is the right time to do it. But also taking into account maybe the political horizon and what's actually going on in the world.
Yeah.
From a budget point of view.
Yeah, that's it. Andy,
I would agree. And I think another thing that maybe John may not experience a lot of is mileage. The director may use their own car, or a member of staff may, and you say, well, what about mileage?
Yeah.
And, in theory, they should be keeping a record of their mileage, and that can easily reduce their corp tax as well.
Yeah.
I know it's minor, but it's a plus point as well.
Yeah. And I think John's pick up on pensions. Obviously, we know that a director of a business can contribute up to 60 grand into their pension pot. And of course, I would imagine for you guys, when you do that pre-year end tax planning, there's very much an element of, well, we could do this, and this, but what's the impact on business cash flow? Mm-hmm. Which, of course, retrospectively, while some of them you may be able to do, is it going to harm that future trading position? Because I've made 70 grand of profit. Lovely. I'll put 60 grand in my pension pot. There's my corporation tax down to only paying it on 10 grand. Oh, but I've only got 50 grand in the bank. And we saw a client, we picked up their bookkeeping, and their accountant had said, go and buy yourself a car. So they bought themselves this £40,000 car, got the capital allowances. And he said, but you'll be able to finance the car. Not a problem. But what he ended up doing was he had to put in 15 grand up front to bring the monthly repayments down. But he'd only got 10 grand in the bank at year end point. So he decided, well, I'm going to do that, go overdrawn, but the interest he was paying on his overdraft was greater than the savings he was potentially going to afford. So I guess that's something that from a bookkeeping perspective, when we're involved, and we'll always try and work with what the accountant needs at the year end, but work backwards to give the client what they need day to day. What's one of the things we'll often have the conversation with them, not on should they do it or not, but if they go, well, what's our opinion? Well, what's your cash balance against your liabilities before you commit a chunk of cash?
I think the problem, Paul, as well, is that when you have pension contributions, that it has to be paid in that.
It's got to come out the bank, hasn't it?
Don't want it after. because it's not allowed.
Yeah.
So timing is good.
Yeah, absolutely. Just picking up on something, just because we're on a podcast here. We are not financial advisors here.
No.
So 60,000 can be a different number depending on circumstances.
Yes. Yeah.
But the point is, cash flow is key in all of these decision making that you're going to make. So there are some costs that you can put through before the end of the year, where there isn't a cash flow impact until after that year. But you've got to make sure that you're looking after that.
Again, that's that planning, isn't it?
And for you to know how much money you need to be able to pay the wages at the end of the month, or whatever.
Exactly.
It was interesting, John, you said that, because I had a client and I said, potentially you can put this money in, but you have the funds, but then he was going for a major contract.
Yeah.
So I'd need to keep some working capital. So it was always useful. You can highlight and then discuss with the client what their requirements are.
That's it. If you haven't checked it out, check out our first podcast with Jackie Hale, because that was all about cash flow, and everything that you do in terms of business has to be underwritten by cash flow. And I think that's what we touched on in the previous one, but it's quite reassuring from an accounting perspective that is still really important. We've kind of touched on a couple of them, but there's some quick wins that we could do throughout the year to make that year-end piece a little bit more fluid and a little bit more accurate. Any quick wins that you can you can share during the year that people could do?
I think I'll probably be looking at wages particularly, and where we actually pay them along the line, because from a cash flow point of view, directors, for example, don't need to be paid on the books. You can do it all in month 12, so you don't have to do it throughout the year. But to look at your bringing cash flow back into play, it's really important to understand what you can actually do. But it's making sure you know what expenditure you need to make. A number of times I get questions from clients. They say, "Oh, right, going to reduce the tax. Right, we do this and this." And I say, "Hang on a minute, stop. Do you actually need that new asset, that new truck? Do you actually need it? Would you have bought it anyway?" And I always take people back to that point. It's one thing about saving tax, but it's another thing about actually being able to be realistic in what your actual needs are. And then from a preparation point of view of the accounts, if they're keeping good books all the way through the year, okay, it makes our life so much easier. A number of times, even those on cloud accounting, if they're not reconciling stuff as you go along, and that's where I would recommend Paul, obviously, for fantastic bookkeeping. But the point is, there's so many clients that don't do that, and they just throw it onto Xero or QuickBooks or whatever, and they think, "Oh, here you go," and you look at it and think, well, you never reconciled the bank. Yeah, well, what's that mean? I think so. Quick wins for me would be having a system that works, utilising good professionals to be able to do that, and then from a tax saving point of view, just always looking at changes that are happening and making sure you're only spending what you need to.
Yeah, I guess understanding break even is probably a really critical part of that, and that ability to get that advice during the year. So you spoke about quarterly meetings. I would imagine you've got clients that you'll do monthly meetings with, especially probably in the early part of their business journey.
Yeah. And just to give an example, actually, because something that's cropped up in the last 2 days, we've got a client, and they've got a potential investor coming into their business. Now, if they didn't have that up-to-date information, okay, they would not stand a chance. I mean, the fact they wanted me to turn around a valuation in 48 hours is another story. But the point is, at least we've got numbers that we can actually go back to the investor and say, right, well, here we go. This is what it looks like.
And they're tangible as well, aren't they?
Absolutely.
They're real time. It's not this retrospective, or the position could have changed between pulling the numbers together and where we actually are.
Correct. Yeah.
I think, John, as we all know, it is frustrating for accountants sometimes where, they haven't closed down the previous year, and then stuff comes in that you've already done the reporting of the accounts, and then you're reconciling back. And, I would agree with John. It's really getting your control accounts.
So just explain control accounts. So we've got a few non-financial people listening and tuning in.
Really, the main control accounts are your PAYE, your VAT, and what that is the account at the end of the month should agree to what you have outstanding, the revenue, and the same with the VAT. I know there's debtors control, which is your debtors agrees to your listing on your nominal. And it's things like that. But having the right information is so important. Because as accountants, we can make concrete decisions and then give advice on that.
Yeah.
Rather than it's a bit airy and we're not too sure. As John Fang rightly says, if you have a bank that hasn't been reconciled, the costs are going to already increase because it will take somebody a lot of time to go through that.
We share a client, and Andy, don't we? That very much his attitude is, well, I've got money in the bank, so I must be doing okay. And actually, it's only when you start to look at those control accounts of how much money do you owe, what's your VAT liability, what's that predicted corporation tax, or if you've post year end, what is my provision for corporation tax, that suddenly you go, well, actually, I might have X in the bank, but by the time I've taken off all of these, I'm not as well off as we think. And again, so that accurate internal quarterly meetings.
I think corporation tax is one of the big ones because a lot of people don't report on that during the year.
Yeah.
And I think that's where they go wrong because it is a big surprise at the end of the year. Anything that we will do, and I know you would do as well, we actually put that provision in every month because it actually allows them to really see what it actually is going to look like.
That's it. And there's a couple of ways you can do that. Obviously, you've got the accounting journals, which would sit in and then can be reversed out, or actually, and the way we tend to work with our clients is we'll build in a formula into the reporting so that there's no accounting adjustments to make, but the report will give them the predicted, which just helps people manage cash flow.
I would agree totally with that. And the thing is, Paul, as well as, going back to John with corporation tax, is a lot of owners don't forget about it. So they say, oh, that's great. I've made 100k of profit, and they withdraw 90k of dividends. And of course, corp tax is going to erode that.
Yeah.
So then suddenly you have, could it be an illegal dividend? And having that discussion then with the client say, I'm sorry, but you have to pay that.
And how would you manage that? So obviously we've got people that might look and go, I've got 100 grand in the bank. I'm going to take 90 for getting the tax bill. So how would you then kind of manage that scenario with the client?
It's back to the communication. It's back to my quarterly meetings. And we try to have a culture where we like the clients to ring us. We won't fee them for that because we know how important it is to us, because the last thing we want to happen is that scenario.
Yeah.
And they've taken the money and think, I said, well, we've got a bit of a problem now. How are we going to solve this?
Yeah.
Now, there are a few creative things that we can do, but it's not going to be ideal for the client, and they're going to find themselves in a very difficult position.
Yeah.
So it's communication at the end of the day.
It's key. And I think lots of clients that we've kind of picked up and started to work with, they are absolutely gobsmacked at the amount of time we want to communicate. The culture is, and I know it exists within both of your businesses, is picking up the phone. There's a generational, I think, chasm appearing between the younger employees that I'll communicate by WhatsApp, by text, or by email, when actually a phone call is half as quick, more personable, and you get an answer almost immediately.
I think, as we all know, communication is key. I think it's just instilling into the client, because I know in the good old days, the client dreaded ringing because they said, oh, that'd be on my time and I'm going to get charged. I always said to clients, just ring me, because the difficult part for me as an accountant is this trying to sort it out after the time.
Yeah. I think the other thing I would add, though, is as well as our younger, it's not always younger, but people that don't like picking up the phone. Sometimes the clients don't like picking up their phone either. So we've now opened up every communication source possible. Yeah. So we've got the ability to be able to get information, whether they're giving it to us through WhatsApp, through Facebook, kind of chat, through Messenger, through email, through phone calls, through you name the community. I mean, we've even had something through Snapchat.
Yeah.
And I mean, I couldn't quite believe it. But this is nuts. Yeah. I think we've got to be flexible to be able to help them.
And I ultimately think that our next generation of entrepreneurs are being brought up on tech and communication via, I guess we would consider them slightly different channels to the norm. That is their norm. And unless we embrace that, we will lose those communication channels, which are absolutely key.
And what we're doing for the younger people, I mean, we're all of a certain age, here, but absolutely, you get younger people in here, and their communication styles are just so different to what we're used to.
Absolutely.
So as accountancy practices, we've got to be able to do that, and help our staff to be able to do that.
John, as we know, as we all know from our inbox, the amount of emails we get. So yes, you can email. The client can easily oversee it by error.
Yeah. Well, it is.
I know a lot more are now going on to WhatsApp, which I think is great because that's how I communicate sometimes with my clients, because I know they're going to be bogged down with email.
Yeah.
So much just WhatsApp.
So I guess just to round those year-end challenges, we kind of give us the information in a timely manner, ideally in real time as much as we can, embracing cloud technology, which we're going to talk about shortly. Make sure that you're having those conversations with your accountant during the year, because that is always going to help you ultimately be successful, I think, in your business. Being kept in the dark by your accountant is in the 21st century now. If you're not being communicated with or having good communication with your accountant, and they're helping you advise in your business rather than being a reactive accountant, it's time to make those shifts into businesses like yours.
So I think Joel and I would say that, communication is key and contact is key, because once the year end is over, that's it. You cannot change.
That's it. Yeah.
And it's allowing us the time and the ability to be able to do something within that time period.
Fabulous. Thank you. So we, earlier on, we spoke about potentially the need to keep that data as real time as we can. And on the back of COVID, I think one of the biggest progressions in that accounting and financial management has been cloud accounting. How have you seen that make the year-end processes easier? Or have you seen it make year-end processes easier?
I have, because I use a certain accounting.
Happy for you to name zero.
Certain accounting for accounts and tax.
Yes, yeah.
And it imports directly into Zero, so it saves me time keying in a trial balance. Saves me so much time. And I think with COVID, it helped the industry move forward with cloud accounting.
I think we're one of the biggest disrupting industries now to break the cycle of that service industry around business. Solicitors are still way behind, as I think as
all you consider, if COVID hadn't happened, how long it would be for us to implement. We wouldn't be where we are today. And even with the advancement in technology, it's at a rapid pace.
I'd go a bit further than that. I think it's completely transformed the way that accountants work, because...
Or it should change the way.
Well, no, it has already. I'm not... There's further to go. I mean, once AI technology gets going, there's going to be another shift.
Yes.
And the likes of Xero and QuickBooks and, well, we won't talk much about Sage because they're so far behind. But the point is there's going to be another shift. But we've already seen that to a place that, one, it means that we've got real-time information all the time, which has really helped not just for the year-end process, but it's helped for clients during the year. If they need a mortgage or something like that, we're able to give them real-time information. I was saying, come back to us in 2 weeks when we've got all of this information. So for us, I think cloud has just completely transformed the way that we do business and our clients do business. It's just helping them to get on board with it.
It is. I think that, and that's a big shift, because that's a change in mentality of people that, with the greatest respect, never set up a business to solely deal with and worry about finances. We're always going to be at the bottom of the thought process, and it's, my year ends next week. Well, actually, if we can shift that mindset into getting people to embrace that technology, it's going to help them all the way through from that receipt capture.
Yeah. Can I give you an example?
Yeah,
I think it's doing really well. So we recently took over working with a charity, and what what we found when we went in there was the finance person was it was a full-time role, and when we looked into seeing exactly what they were doing on this, okay, yes, they had got cloud technology in place, which was great. We thought this is fine, but what we then found out was they were still pinning in all the receipts and writing them all up and doing them all themselves. Not only that, they were keeping all the papers. They got absolutely piles of paper everywhere, and it's like very quickly we were able to just kind of educate them. And I mean, we're predicting that 5-day a week job is now 2 to 3 days tops, simply because of very simple changes of them adapting to understand cloud and everything that is in it, because it's not just Zero, QuickBooks and that. It's all to do with
it's the processing.
it's the processing and Dexter or whatever other software that you're actually using, and how they all interact. And that's what us as accountants, it's a new role. We never knew we were going to be technical people, but now we are having to explain to people. But once they see it,
I've got
please as well.
Thank you for that, John. I have a client, accountant, ran his business, and he had Sage Line 50. So every time he would be inputting the invoices into Sage Line 50, then moving it on to another system. And, he said, I go on holiday and I really get concerned because of cash flow and I can't chase. And I said, well, try Cloud Accounting Zero. And he was a bit skeptical because he was worried about, people hacking in and whatever. And I said, they're more likely to hack into your standalone system than on Zero, because Zero is such a large organizational level security. But it saved him a third of his time because invoices are automatically produced on Zero. Reconciliation, he didn't have to put in the bank statements. It was automatically there. He could go on holiday, log in, sort out the cash, what was coming in, what was going out, never look back.
No. I think if we kind of work backwards a little bit for us, so as a business, we're instrumental in getting people onto that cloud journey. And we often talk about what are the quick wins when you move to cloud accounting. And cash flow has been intimated earlier on. But the biggest difference we found, other than that accessibility and real time from your perspective, for us supporting the business owner in that day-to-day transactional stuff, is getting paid. That ability from a cloud invoice to be able to have open banking and pay it via a direct open banking link, or collect that invoice automatically by direct debit, or even pay on a credit card, fundamentally has changed the way businesses now transact. But you can't take that unless you transition into those cloud systems. So we talk about the need for better data. Once you're in the cloud space, that data is suddenly there. So actually, and I guess for you as an accountant, you're doing that year-end piece. You want to check that something's been popped into the right category code. Let's not get technical and talk about nominals and this sort of thing, into the right category code, because it's a large value. There may be a question mark, can that be common asset? Well, actually, if you're using cloud to its truest, you're able to then view that document inside the accounting system instead of, I guess, that phone call that says, can you scan me over or email me over a copy of that invoice? And has that made a big difference for you in terms of making sure they're maximising those allowances for themselves?
I think for finding information, it's a lot easier to actually do that, because we can just click into the particular place and the invoice is there to be seen. So I've got no doubt that has made a difference. I think it's also really important to let people know that the cloud account, if you're not used to cloud accounting, it's intelligent software. So the majority of the time when you do take a photo of a receipt and it goes in, it will correctly put it into the category it's supposed to go. But it's not foolproof. And we will always say that. And even when AI takes over the world, this is from sound rather, okay, it will still have that. It will need us human touch to be able, because everything's not 100% perfect and errors can be made. So, but time saving is
it's used. We use the line with we're doing a lot of work with YMCAs in transitioning those from desktop software into the cloud. And whilst in that charity sector, yes, there is a potential cost saving. We try to position that because you don't like to see people lose jobs on the back of this, but we can redeploy that resource into something that adds far more value. And we're finding that internally that the data entry part of that accounting role, not necessarily accountants, but that accounts processing, adding invoices and receipts. If we automate that using AI and machine learning, we transition, and we've done this internally. Our team are now data verifiers and are now starting to work with that data to provide a greater insight to the clients on things like average spend, average invoice values, stuff that really does add value, that supports what the accountant does. So again, if we're not embracing those, I'm going to call it an ecosystem, to coin the phrase of both of the major players, Xero and QuickBooks, talk about an ecosystem of apps. It's, can you remove human touch points in things that can be automated, because that's suddenly going to give us and afford us that time saving, which can be translated into going and doing more business or putting more money on the bottom line, depending on which way. Or actually, and this is one that was only brought to my attention, I don't need to spend 3 hours on a Saturday morning. I can go and watch my kids play football. And I thought that was a real significant reason for adopting cloud. The byproduct for them was better advice from you. But I can go and watch my kid play football on a Saturday morning instead of spending 3 hours in front of a computer. That spoke volumes for me.
Paul, I think that it's not just a benefit for accountants, it's a benefit for the business owners as well.
For me, it's got to be a benefit for the business first. Yes, we need it, but as accountants, you've dealt with whatever you've been supplied in the past. But yes, we want this transition into the cloud sphere, because then you can give better, more concise and actually real-time advice. Can I buy? Should I do? You can log in and go, yes. And John, you're talking about mortgage statements. It's dead easy, isn't it? Because it's all there. The proof is very much there.
The thing is, Paul, as we know, it's lovely having the invoice attached when you record it. Because I know of a story you told me with the VAT inspection.
Yeah.
Where normally, it would take a day, 2 days, because they were writing through files of invoices, where now they can just click into the particular expense, click on the invoice, and it's there. And it just, I think cloud saves time. And I think of as another way with bank reconciliation. Yeah. I've got one client that I'm trying to move to cloud. And they have to record the bank statements into the system first and then reconcile. Where with cloud, it's automatic.
It's that auto feed in, isn't it? It's that auto ability to connect to your bank, drop your statement in real time. But yeah, Andy, that VAT and John, I know you've not heard this. We had a client that bought a van, is in engineering, and his accountant he sees once a year. It's based overseas. Family, friends. So actually we kind of support that little bit of day to day. And he rung me, all of a panic. I bought this van, which had triggered a VAT refund. Genuinely not a problem. And normally HMRC, we'll give you the refund. But because this was so unusual, it triggered an inspection. Yeah. So the VAT inspector turned up at his unit, checked for the van, checked for the other bits of kit he'd claimed in the past, came round to our office. He is on QuickBooks, but we use Dex alongside QuickBooks to capture that data. The inspector had said, can you show me the purchase invoice for the van? Popped it up on the screen. Oh, wow. Can you show me the next 4 biggest invoices? And she'd highlighted them on the VAT audit report. Yeah, here they are. 5 sales invoices. She was there 20 minutes for a VAT inspection because everything was spot on. So again, another benefit of that, using that and adopting that technology, is if you do get the VAT inspections, they are no longer scary. You're not going to get a team of 3 or 4 coming and actually trawling through everything. And yeah, she was in and out in 20 minutes and half a cup of coffee was still on the table. So
And as John found out, he said, you don't need the space anymore.
Yeah.
The invoices, they're already on their system now.
although in saying that, one of my businesses complained that his energy costs had gone up because he'd emptied his loft of 14 years of paper, and so everything was escaping out of he had to relag his loft.
Well, there we go. There's sustainability
There,
somewhere in there.
There is absolutely. We're all about sustainability. Yes.
Environment.
And so we've spoken about the benefits of cloud, but have you got? I mean, we do specialist migrations, but if you're advising your clients that we've got over the hurdle of them seeing the benefit of shifting to the cloud, what type of things do they need to look out for, or that do you look out for when you're in that transition from manual desktop shoebox into the cloud? That if people are thinking about doing it themselves, and we love the tele adverts, they're our best friend because we potentially, if you get it wrong, go in and clean it all up. And so always appoint a specialist correctly at the time to help you. But what type of things do you look out for?
I think you've hit the button there. I think the biggest problem and the biggest threat, and the reason people won't go to cloud, is because of the rubbish that they're actually putting in the first place.
Yeah.
Because as much as we'd love to think that it's all accurate, it's not, and they haven't actually got the information to put into the cloud in the first place. So I think that's the biggest hurdle for anybody going in, and therefore I would say appoint someone like yourself, Paul, or your team to actually do that transition. You've done it for one of my clients in the past, and it kind of, and they were just delighted because suddenly the pain had completely gone away.
Yeah.
So are we looking out for anything specific? I guess it's what tends to happen is we find things that, what do they say? Something in the wardrobe that, that comes out, and you think, oh, hang on a minute, what's this? And you think, yeah, that was something from 1964. Well, I'm exaggerating, but that's the biggest trouble because, and certainly from a tax point of view, if there is an inquiry or something, we need that data historically to be brought into the new system.
Yep. Andy,
I think that's the same. It's really transition is moving across from the old system to the new. As you know, I know you've got a lot of experience of this, Paul, and it works 99% really well. There's the odd hiccup here and there, but overall, it saves a lot of time. It gets it onto the new system. We all need history because, as you say, John,
so we're mandated for 6 plus the current financial year, aren't we? So yeah.
The other thing I will say is, and this is a bit of a plug for better software. We've recently been dealing with Zoho books. Nothing against you, Zoho. However, this particular client messed up their VATs. Well, they thought they were VAT registered, but they weren't. So we had to redo a load of invoicing, and to actually change the rate was actually they weren't allowed to do it. So we ended up having to get hold of Zoho and had to do it themselves rather than ourselves. Whereas QuickBooks and Xero, who I think the 3 of us would all recommend if you are looking for a software choice, there is cheaper out there, but don't go cheaper.
No. Pay cheap, pay twice.
Yes, absolutely, because that can be a problem.
Yeah, and and in terms of that transitional piece, so we've convinced the business to go cloud. Logical times to shift?
Usually at the end of the year.
Year ends, VAT quarter end of the 2.
Yeah.
And I guess, and hopefully I sing from the same hymn sheet as you as accountants, those 2 are the usual times that everything's been fully reconciled, everything's verified, those control accounts that you spoke about earlier, Andy, have all been checked, and it just makes that transition slicker, smoother, more accurate. And if you're shifting at a definite year end, you can be up and running in your new system in days. Even though your year end might not have been finalised, that transition can happen.
Something else you can do as well is you can get hold of the software earlier to play with it.
Yes.
So sometimes, because it's scary to some people. So I think, again, we would also, we can give you demo stuff to play with. You can mess around for a month and do it together just to make you feel comfortable with what's going on.
That's it.
But then the actual transition itself can be, as you rightly say, can be done within a couple of days to a week.
I think, John, you're right. It's a lot of it is psychological, and it's as we all know, it's just human beings. When something is new, we're a bit not too sure, but it's once they get used to it and they look back and thinking, "Oh, this is great."
Yeah.
And I had another client. He wrote out all his invoices, and he was just spending a fortune printing and stationery. I said, "Look, there's other ways. Have you considered zero?" Initial sort of, "Oh, I'm not too sure." But once he started, he never looked back and said it was the best thing he's ever did.
And when clients agree to that transition, do you put them into let's call it the accounting software in standalone and allow them the rest, or do you try and encourage your clients to, let's say, go both things instead of dipping the toe in the water? Do you guys try and say, actually, if we're going to put in zero, are we going to put in a Dext, an Apron, a HubDoc, an auto entry at the same time? So actually, when they're getting their head around changing systems, they're not learning one thing and then suddenly having to learn a bolt later on. We're thinking then about process flow.
I think it works both ways, if I'm totally honest. Sometimes it scares them so much that the idea of changing everything at the same time, I would much prefer to at least get them onto the main software. And then some of the bolt-ons, which we all know are really, really handy, but introduce them later. For those that just want to go for it, absolutely encourage them to do it all at the same time. But sometimes you get a bit of there's a lot of things to change.
And I'm going to play a little bit of devil's advocate, because what we've done with some clients for where their accountant holds, if you like, their zero and has done the cloud accounting piece for the MTD VAT primarily, we've introduced them to the front end, the OCR tech, so the Dext and Apron to name two, and then the accountants connected it later. So we've given them what would be their core tool. And then actually we've transitioned, because their invoicing they were doing, whether it was Word or something, they've got some system in place. So we kind of put in the system that's completely new that they're going to pick up and manage. Then it was about introducing how do you invoice out of the system, and the accountant still does their bits. And then actually what happened is, instead of it becoming a bookkeeping role for the accountant or us as an outsourced bookkeeping firm, the client realised actually that they could do it all and it wasn't scary. So yes, whilst we lost a bookkeeping job that we thought we were going to get, it's doing right by the client. And it is, I think you said it, it's knowing the client and where are they on that. I'm going to call it a technical journey rather than just an accounting journey.
There's a play, it's a selling technique. So probably I'm going to say this, but the way that we will do this is we will actually start off by saying, you can do this yourself.
Yes.
And then we run through and say, but obviously, if you prefer to spend your time doing something which is better for your business, we can obviously take that off of you and then offer them a pricing method for doing that. And it makes them feel that you're not hard selling them.
That's the approach to take.
That's how I grew my bookkeeping business. I originally started solely to do implementation, training and support, and they were going to manage their own. And it was only when you then got into the training with them and they suddenly went, not quite so sure I want to do this. Which bits can I do? And then you start saying, well, actually, you raise your invoices, because by the time you've emailed me to tell me what to put on an invoice, you've done it yourself. And if you capture the data, we can pick up the rest. But it is sell it that they can do it themselves first.
It's like with this client that I mentioned earlier, where it was handwriting all the invoices, showed them zero, liked it, and then it's really knowing your client and knowing and just doing it sort of bit by bit. Because we started off initially, he would raise the sales invoices, we would deal with the purchase invoices, and then as he got more proficient in using Xero, he then started taking on the invoices and putting them onto the system, etc. And it's just, gauging time, because some would say, I'll go all in, I'll do the whole lot, and then others you just build up gradually. And it's once they got the confidence, I never look back.
And I think if businesses are going to do it themselves, and I applaud people that want to do that, to retain that level of control and knowledge, I would always encourage them. And yes, it may seem a bit salesy, get some training either from your accountant or a third party trainer, so that data goes in tangibly accurately and the outputs then make sense.
Yeah. We've got a property company that went on to zero 3 years ago and refused to have any training. And we're in year 3. And it's just as if we'd still got manual records.
Yeah.
It's not benefited them at all because they were not prepared to actually go through that process. And so we can say great things. We all know how good it is, but you've got to know what you're doing with it.
Yeah. Unless that added rubbish in.
Yep.
And then we go back to where we started. You know, if it's rubbish, you can't really advise.
No.
It's making sure the correct processes are in place.
Yeah.
The information entered is correct that you can then make. Yeah.
Someone used an analogy with me when we were talking about the taking a training package was actually, I'm going to take the training because if I'm not a mechanic, am I going to suddenly take my engine apart and put it back together and expect it to run the way it should?
Yeah.
And it's the same with the account. Either put people in post, whether that's internally or on an outsourced basis or your accountant is doing it, to get it done right first time. And yes, there's a cost, but you will more than get that back in terms of quality of data, time relieved, but actually the tax savings that suddenly then affords you because the accountant's not going to go and rectify things makes a big difference.
But we'll all have to go back. It's what's the business owner aims and goals. Because really, do you want a business owner to spend an hour on bookkeeping when they could be out networking or gaining more business?
Yeah.
And it's just getting that balance right.
Yeah. So in terms of the benefits of cloud, I think we're all very much on the same page around embrace it.
Yeah.
Try not to resist it. And there are things coming down the line making it actually difficult for it, which means you're going to have to embrace it anyway.
Yeah.
Or if you don't, it's going to cause you even more grief. So actually, cloud accounting as a technology and as a process and as a system is absolutely going to improve your business and the way that you can manage your business. So we've spoken about those common year-end challenges, and we've spoken about that, why it's beneficial to make that transition into sort of the cloud sphere. So once people have made that transition and they're now looking after their own records, so they've not opted for whatever reasons to outsource it, what sort of essential records, and let's deal with the essential piece first, must they be keeping? And let's deal with this in 2 parts. For VAT registered businesses first. So what essential records are we expecting as the professionals that they have kept, ideally inside the software, but if not outside?
So I think invoices is the obvious thing. You have
As
to
in
put
purchase
invoices.
Yeah.
Well, purchase invoices and sales invoices from that side. It's worth mentioning as well, at this point that there is so much digital stuff now online where you don't actually receive invoices. And we get this query all the time. So we couldn't get an invoice. You go on the M6 toll. Okay. They don't give invoices anymore. It's a great example.
Yeah.
So it's important for us to have the logins to those accounts. So all the parking apps are now, because it's all paperless.
Yeah.
But we can actually retrieve them. So we have to have the logins or they need to be able to put that in themselves. So I think the key ones, and then you've got your payroll records as well. If you're doing your own payroll, that all has to be kept. An important thing is that when you're setting up the invoices on the sales side, okay, that they have set the invoices set up correctly. They have the VAT registration number, the company house, the company number and things on it. So many people just think, oh, we'll just use what we've got without actually doing that. That bit of that receipt is not legally admissible if it hasn't got that VAT. You can't claim the VAT back. So I think that's really important.
And am I right in saying on the sales side, if you've got an inspection and there are numbers, because invoice numbers go sequential, am I right in saying that HMRC question where are the missing numbers?
Well, 100%.
So again, make sure that you're sequential and actually if you're going to void an invoice, credit it rather than just void it. So you create.
Don't delete it out the system. No, definitely. Yeah.
No, good.
Because that always makes it worse because then it plants a seed of doubt into the HMRC, which would
Okay. So essential records, then purchase invoices, obviously payroll records, and most payroll records now are electronic in some guys, whether that's inside the software or HMRC basic tools as the alternative. Any other receipts or documentation we should be keeping? I've got a couple of examples which I'll chuck if they don't come up. I'm not trying to catch you out here.
I just want to say it's really, receipts that you're on the hook and you just pay by card.
Yeah.
Not just put it in a folder and leave it in the dashboard of your car or van.
Yeah.
But just photograph it straight away.
Yeah.
It's done. It's there. It's entered onto the system.
There's also things like mileage records, which are, again, it's all electronic. You can actually just keep a tab of your mileage records as you're going along, which makes life a lot easier if you're going to make a claim for your mileage. It's just a number of, I actually say to clients, I'd prefer you to put everything on the system.
Yeah. And let you decide.
And make us decide, because we can't decide on something we don't know about. And they think, oh yeah, I see what you mean. It does mean occasionally we have a good laugh because they come up with something that's
clearly
not a business experience, but they don't know.
Yeah.
And that's where our expertise comes and your expertise comes into play. And say, oh, right. Okay. Now this is something.
I think this is critical when you're doing VAT returns.
Yeah.
Because you're saying, you can't get the VAT. They go, why not? Well, you don't have a receipt or it's not a VAT receipt.
Yeah.
So
but they're a national company. So we know the VAT. No.
So I would say to people, really, if you have receipts, make sure you remember it's not like a
credit card receipt is not acceptable for VAT.
So the biggest problem area for us is CIS.
Yeah.
Because
so construction industry scheme. So those operating over in construction and
and a lot of people don't realise that they have to be in the scheme.
Yeah.
And that's the biggest problem that we get. And they go about there, they give us all the invoices and things, and then we find out after the event and say, well, you should have deducted tax from that.
Yeah.
Oh, well, we didn't know. So we try to take that back in hand. Yeah. A lot of them don't understand. And, I'm going to knock the government slightly here. Well, not just the government, but it is a very complicated system.
It's complicated.
And for builders and people who are in construction, who've not necessarily got those skills, they're brilliant at building houses and stuff like that, but they're not so good at paperwork. It's an absolute nightmare. And so that's an area where they definitely need to be.
It's like the subcontractors, so you're meant to check them out and be able to say, right, this is the correct tax to do.
Yeah.
And sometimes you wonder, how, where did you get that?
Yeah.
Well, I thought that was the figure. No, you're meant to check on.
That's it. The number of times.
It's a real good problem.
We have a client that, he uses loads of subcontractors, and some of them he takes a bit of a punt on, and he tells them, and they ring up HMRC and they register for self-employment. Perfect. Then when you verify them, 30% deduction rather than 20.
Yeah.
Well, he's registered, but has he told them as a subcontractor? Yeah. So there is a little tip.
Yeah.
If you're going to work in construction, tell HMRC, I am working in the CIS scheme, just to protect yourselves, and because we don't want to keep 30%. And whilst it comes back at the end, it's a big challenge. I just want to pick up a couple of the apps that I mentioned. I'm going to chuck a document at you that I think is valuable to keep inside the system. But what mileage app? Because I think that's a big part now for those that have decided that running a company car is not the most tax efficient way for them. Yeah. So let's claim the mileage. So is there any apps that you guys recommend? I mean, I know what ones we kind of encourage our guys that use mileage for Trip Catcher or MileIQ.
That's all I was going to
Trip Catcher because it integrates with Zero. MileIQ, I think, integrates with QuickBooks.
Yeah. So Trip Catcher is the one that we use internally, and I guess that's
so cost effective. I mean, it's like 15 quid a year for an individual. It's peanuts to have those accurate records that we spoke about. Yeah. And the other document that we try and get at the start, and it comes back to more fixed assets, is if they're buying it on HP, we try and ask for a copy of the HP agreements that we store against the bill. Yeah. So that actually, when it comes to you doing your job at year end and accruing for current year liability and more than 1 year, you're able to see that document. So we consider that
that's good
as important as you guys from a recent perspective.
Loan agreements as well.
Yeah.
The same thing. There's a real, nothing we can do about it now, but during COVID, obviously a lot of people got the
bounce back.
The bounce back loan, and there is no paperwork. You ask anybody, and no, we've never had anything.
Yeah.
And that one is a problem. I mean, we've obviously got the calculator.
I was going to say it's quite easy because everybody was lent it. CBIL's slightly different, but the bounce back 2.5%.
But even so, from a compliance point, I mean, we should be checking that balance because we might not know that they've missed a payment or they've taken a holiday or whatever that might be.
Obviously, we've spoken about then the important document, handling those receipts and expenses, and I think receipts we've kind of already covered in terms of using a Dext or an apron. But what about expenses that, let's call them out-of-pocket expenses, that they've not got a company card or they've not got it on credit through the business? How should businesses look after and manage that expenses piece in your opinion? Because of course there's still potential.
There's various ways, Paul. Really.
We're just trying to, if you like, give our viewer and listener some ideas on what should they be putting in place if they want to come and work with you guys to make that job really easy.
I mean, really, there's certain providers like that will give cards to employees that the employer pays, and on there all the expenditure will be on. I'm sure it's similar with a caption with the receipt. Back it up. Would be the best way. I know some that have to claim on expenses and attach all to the back of an expense, but I have to give, a card of some sort. And there will be, as usual, a credit limit.
At
a certain point.
I mean, we do have a habit, rightly or wrongly, to ask for personal statements. Simply because, I mean, I do it. I spend a lot of money on a personal card, which is business expenses. So I'm very lucky. I've got a PA that will sort through it all for me and do it. But that often will get missed by people because you pay it out your own personal account. And yes, you might not want to share that with your accountant or your bookkeeper. But actually, I would say to people, we're not going to share this stuff,
or judge you,
or judge you. And there's probably expenses there that you might not be claiming
that you don't think
that you could do. And the way that we then treat it with something called a director's loan account, which we're able to actually put those expenses again, to allow you to take that money back out in the future.
And ideally, sorry, Paul, I think it's ideal it should go through the business. Because then you capture everything. I understand where John is coming from, that yes, we do. Because it's just sometimes we forget, and then you've filed and you're thinking, I've spent such and such on my person.
I think I'm just being a bit rear-ended because I know what people are like.
Absolutely.
And you do it, especially if you've got a really small company. You're out there. You pick the wrong card out.
Yes,
that's
the
normal.
I think that's the issue. I think that's the issue. You pick the wrong card out.
I've confessed I've done that a couple of times. I paid for it on the wrong card again.
But it works the other way. If you accidentally pay for something on the business because you forgot your personal cards, again, the way you've just mentioned about actually charging it against your direct loan account, this will just be the same, and it will just be classed then as money being withdrawn from the business. It's more sort of because we do this all day, every day. There are a couple of fantastic apps out there, Pleo being the best, where they get preloaded. So it's that preloaded card that you were talking about, Andy, and they can pay for their business expenses and capture the receipt, but they can also get reimbursed on that if they've paid for it irrespectively or retrospectively. So for those that have that challenge, and probably slightly bigger businesses rather than those owner managed where it's a little bit easier, is look at some of these cards that can help manage the expenses process and take away the Excel spreadsheet with all the receipts attached to the back. But if you're not keen to give people a card for whatever reason, have a look at some, probably there's Expensify or Xero have got expenses, which will capture and build everything in to technically what is an expense report held in the system that you can then reimburse as you would normally, either through payroll or as a payment at the bank.
a lot of these cards as well to encourage you to use them offer rewards as well. So there is a lot of them out there where if you put all your expenditure on those cards, you will get a reward back the other side. And
I am a massive advocate for that. We use Capital on Tap, and I am giving a plug 1% back for nothing. And if you pay it off in full, and typically I've had Capital on Tap now for the 7 years that we've been trading properly, and I worked out I've had just over £6,000 in free money.
That's great.
So actually, any cashback card or reward card is really beneficial. Really beneficial.
I know, Paul, we're slightly going to tangent, but going back to expenses is with cloud, and if once you got a bit more experience, it's like Teleroute and there are other providers available, but that allows business owners to sort of put money into a certain account. They authorize the invoice and the payment will be made automatically.
Again, slightly bigger businesses. It is slightly bigger businesses that have got an accounts payable team or an outsourced team that prep it, and then someone else pays it. So we're starting to actually quite apt, Andy. You've moved into where I kind of thought would be useful to explore next. So we're capturing our records and we're managing and capturing expenses to a point. So managing cash flow, both during the year, which I think we kind of touched on, but it'd be good to dig a little bit deeper, but during that year end piece, because cash flow is critical for some of the advisory pieces that I know you two guys can do. So if we can kind of pick that up as two parts, how do we support and manage clients with cash flow during the year? And then how do we help them manage, I'm going to call it tax planning, with a cash flow in mind? And so whichever one wants to.
Okay. So throughout the year, what could I say for, we will always keep an eye on where you are. We suggest you keep 3 to 6 months in your account to be able to pay the bills, pay the wages and stuff like
3 months of operating costs.
Yeah, operating costs, or 3 to 6 months, depending on what those operating costs look like. That generally is a good place to be, because if you're struggling, then you know that you might be having some difficulties in the business. And it is about putting things on cards, because you can actually manage it with monthly payments. Yeah. So the more things that you get on a monthly basis, the better. So we go cardless, which is but again, most of our clients are on a monthly retainer, and we would doesn't matter what your business is, we would suggest if you can do a monthly retainer, it helps your cash flow massively because you know where you are. So during the year, it means you no surprises.
Yeah, that's it. We haven't got that big year end accountant's bill. And you've paid it.
And don't get me wrong, there are certain things which will crop up. You know, you get a recruitment bill or something like that. They won't let you spread that.
Yeah.
But there are certain things that come up. But generally speaking, you can manage the majority of things.
I think you're quite right, John, but I think one of the biggest things is making sure you got your VAT bill. Yeah, and they're ready for you.
Yeah,
because so many people forget and may think, I need that new machine or whatever, and then spend the money thinking, what about your VAT?
Yeah. So do you encourage clients to have a second bank account?
I do. Yeah. Where I know there's a bit of difficulty, I advise them to have a second account.
We're massively keen on either as many savings accounts and make that money work for you, for VAT, for POE, which corporation tax. But those that are perhaps not that savvy, we talk to them about moving to one of the challenger banks, a Starling or a Monzo, that you can have the pots. So from an account perspective, we don't see anything, but they're able to automatically set money that says, if I receive an invoice for 1,200 quid, the system will automatically move the £200 VAT into the VAT pot. And that, I think, is a great way, because people, and we've got a client I only spoke to this morning that said, I can look and see what I've got to go and spend on a little bit more advertising, because I know I've met my other commitments.
And the thing is, I think it goes back to knowing your client, because there are some who are very good at what they do, but cash flow maybe not one of their greatest assets. Well, but and that's where you always can advise, and especially suggest, I've got one client that has, as you if I rightly say, Paul, a VAT on corporation tax. So he knows he has them.
And the way we sell that to people, by saying to them, actually, you're going to get a big benefit, because we would tend to suggest to people they keep slightly more than they're going to need in that account. Yeah. And then when they get to the end, I might say, Paul, if you do it this way, it's going to be great, because you're going to get to the end of the year and you can have enough money for a holiday because it's still sitting in the account, because we're over egging along the way. On a personal side, there's a number of bank accounts. I use one where they transfer money across depending on what your balance is. And I've just paid for a weekend in Paris off the back of that. So there's little things like that which actually will benefit our clients,
and that's
personally. And that, again, it's the carrot and the stick. Yeah. See that scenario, you give them this carrot, then there's something good at the end of this.
That's it.
And that's the way to kind of get people to do it.
But that's that proactive accountant actually offering tangible advice instead of just, here's the bill.
Yeah.
Just on that monthly cash flow piece, there's lots of businesses that will look and try and run their business off their bank balance. So when you get that monthly and quarterly reviews, that cash flow forecasting of actually, yes, you might have £100,000 in the bank. Very nice. But actually, when we then start to predict this over the next 3 months, you've got a payroll bill, as VAT bill. Oh, and your corporation tax is due. Well, that's suddenly now left you only with £22,000. And I think that for us, when we're working with those clients and those bookkeeping sort of jobs day to day, that's the biggest thing that we get asked. What have I got left? So I guess where I'm at is, do you offer that level of support to do that, if you like, future prediction?
Yeah, I mean, we do it 100%, and that's why we make sure because corporation tax is the one that's harder to actually keep account of. One, we suggest you do it monthly. Yeah. But all of the pots, we will all call them pots or whatever. Yeah. We will actually do an analysis. So if I'm going to a quarterly meeting, I'm thinking of a client I'm going to on Monday, I will make an adjustment for the corporation tax for the director's loan account, because often people spend and then take the dividend at the end of the year. So it's just the way it works. So all of those type of things, we definitely make a conscious effort to be able to support them, to be able to.
I guess it's being informed, isn't it? It's those informed decisions that then lend us nicely in towards that cash flow and how do I manage it for year end purposes. It's built, I guess, during the year, building almost the year end pot to allow the accountants, to allow you guys to then look and go, we can tangibly do and afford to do this. And there then is a mitigation on the tax liability.
This is why we're here today. This is the wonderful benefit of cloud accounting, because you have today's information where if you got somebody that brings their manual records, you're already out of line. Yeah, you're out of date.
Yeah, the other thing I'd add at this point is it also, we can earn you money, because if you're perhaps doing relatively well, there's obviously, you've got surplus. There's a number of banks now out there where you can actually split your funds between different rates of interest. Yeah. So you could actually be earning money on that corporation tax that you've been saving.
That is 9 months away.
Which is 9 months away, and be getting a better return than just keeping it in a current account where you're earning nothing, basically. Yeah. So all of those kind of planning things are things that we would go to our clients with and say, here's a suggestion. Why don't you do that? We notice that. We also warn people about if they go over the 85,000 in a bank. There's got a number of clients and I say, you've got 130,000. I'm not expecting your bank to go bust, but you need to know you only got 85,000 protected.
And the thing is, John, I think as well as that is being aware of the group of what banks are within the group, because it's the group. It's not just one particular bank. So if you got 3 banks and they're in one group, you just got the one.
And we're not here to beat up the high street bank, no, by any stretch, because they have a place, but I think they are a poor offering in today's business climate for business in terms of cost and interest.
Yeah, I think in most businesses, if you're still getting cash in, it's a different story. Because the post office, which is where you end up having to pay into, do charge quite a lot of money to actually get it in. But most people don't. cash is it's a lot less used these days. So completely agree.
Yeah, I think as well as that, for people viewing this podcast, it's not a difficult thing. There are certain providers out there that you just need to register once, do your money laundering checks, and then you have access to a whole pile of banks and societies and whatever. And then they can break it down to whether it's instant 30 days, 6 months, a year, 2 years, whatever, and you get a higher rate of interest.
That's it. And I think, again, the message is absolutely coming across. Work with proactive advisors, bookkeepers and accountants. They will make your money work better for you in whatever guise that looks like.
Paul, I had an example the other day from another accountant where they went to see a potential client and they had 1 million sitting in their current account.
Wow.
Not earning anything.
No, since you want to worry. I know what I earn on my few pounds, never mind that sort of money. But again, it's, if you don't know and it's not your forte in business, you're just going to leave it there. So we've done all of this stuff now. We're on cloud. We're keeping really good records. We're doing a little bit of cash saving. What do you now need the business owners to do, prepare, bring when they meet you for that pre-year end meeting? So what extra can they do, if anything? Because it's all right, us as and you as the professionals taking it to them, but what do we need back from them to make the whole cycle work?
So I think for the pre-year end meeting, I may have said this already in this, but we do quarterly meetings.
Yeah.
So we look at this month 9 meeting, which you were talking about. For that meeting, it's really having then a good idea on what's going to be happening for the final 3 months of the year, because we've got the opportunity to suggest some tax planning for them, whether that be paying into a pension, actually buying some assets, or a couple of other things that we could possibly do. Always thinking about the cash. But at that particular meeting, the other thing I tend to do as well is that they hold stock. I know I won't get that stock take at that point, but I need to have an idea of what that stock looks like, because that adjustment that is made at the end of the year, and even if it's on cloud, unless you've got a stock add-on, which you can probably recommend a couple to people in a minute, I'll let you do that. Okay. Unless you've got a stock add-on, that can be fundamentally different between what the result you think is going to get and what you actually finally get.
If they get delivery the last day of the year.
Yeah. And then the whole thing, all the planning that you might do is a complete waste of time just because of one number.
And I think, John, going back to what we were talking about earlier, is do they need that level of stock? Because that's all that cash made on. Do you actually need it? Is it worth a review maybe to sort of put that again and have it in cash flow?
And John, the stock system that we recommend is one called Stock and Buy, but it does drop shipping. It does loads of things. And again, these are not necessarily plugs, but what it's saying is that there is a whole ecosystem that will take and make life really easy.
Because come back, I think another thing that which John and I will do is depreciation.
Yeah.
Because there's so many clients who don't work out their depreciation.
So depreciation, they buy something for 10 grand, but in 2 years' time, it's not worth 10 grand. So you're writing as a cost.
It's really a cost of using that asset.
Yeah.
So it's like, you can't tell me that you buy a car for 40,000 and in 5 years' time, it's still 40,000. It's sort of using that time to reduce the value of the.
But I'm right in saying that not allowable for.
So it's not allowable. And this is where we got a difference. We got accounting and tax standards, which are completely different.
Yeah.
And actually, it is a good point, because a lot of our clients don't understand the difference between the two, and they think the number they see at the end is what their tax will be paid on, and then we go and change it, and they think, well, why is that not right? And those, because there are certain things, unfortunately, are disallowable. We're not allowed to claim entertainer, for example, and depreciation. So they all get added back. But on the other hand, there are capital allowances that can be claimed. And if you're into research and development, there's things like that can be added in as well. So it works both ways, but that's our job. So,
and something that, an accountant that, I used to work with, they've retired. They used to ask when their clients were coming in for that pre-year end, they were really proactive as an accountancy firm. I mean, they were way ahead of the time. This is like 15, 16 years ago. They said, what do you want as the business owner for the next 12 months? Because that helps shape some of that conversation. It's all right saying, well, actually, I'd like a nice big pay rise next year. Well, you start thinking, well, yes, they might have the reserves this year, but actually, do we want to put it then into that pension or buy an asset if you want to reward yourself next year?
I had a meeting on Monday with a client. I had the financial advisor on the call as well. So it was a call between the three of us. Basically, it's a travel company. They're doing exceptionally well at the moment, but they can see that market will drop in 2 years' time. So all the planning that we're actually doing is to maximize or minimize the tax at the moment, but also make sure they've got enough to be able to deal with later on. That's what we do, and that's why we will always ask some very personal questions to you as a client. And those that get it then understand. The pain in the neck clients, if I'm totally honest, are those that do not come out with all the information. And we've got a tax inquiry at the moment where we've done everything in good faith and then found out that actually we weren't told all the information that's actually there. And that's part of the problem. Yeah. And that is educating you guys as clients to actually just be honest with us. We are not HMRC. We're not against you. We're actually for you, and we will try really, really hard to maximise what you can.
And I guess just to round up the podcast, I'm just going to ask if either of you or both of you can share a success story where really good preparation has made a huge difference to a business, whether that might be a struggling business, that preparation is not necessarily year end, but it's that monthly support, or whether it's just a year end piece that you've done with somebody that's made a huge impact on them and their business. Because I just think sometimes those stories are better.
I mean, it goes back to what John and I keep on saying with tax planning. I had a client and sat down with him in month 9 and again said, this is your corporation tax. Looked at various things and we managed to reduce at his year end his corporation tax by £19,000.
Wow.
But that was pure by planning and looking at various matters really. Yeah.
I think I will use an example, a bit of a longer term example, because it's not always the 1 year.
Is it?
Yeah. It's sometimes long. So there's a client I started working, a social media agency that I started working with very early on, and worked with them for 7 years. And by adopting cloud accounting, by giving good tax support all the way through, they always knew what their plan was, and that was to sell out at 7 years. So all of the things that we did with them, were all around what they were going to do. And they were able to sell that business at year 7, for, millions of pounds, which has allowed them to go on to their next venture and stuff like that. So I will always say to clients, my first question to a new client is, what do you want to achieve? Yeah. Start there and then we work backwards. Because if we don't know what you want to achieve, there's no way to go. But to achieve that, you need good records. You need to have a proactive accountant working with you. You need to be honest with us, both because everybody wants things now. They need a short-term, medium-term and long-term plan. If you get that right, you've got the right pots in place, everybody's happy.
I can relate to that, John. I had a client, and 5 years, sort of had the sounding board of saying, right, what you want to do, because you come out to retirement, what is your plan? And they want to sell the business. So we were able to put them up to cloud, get the information, get the systems in place. And again, they sold for millions. And they now nicely retired.
Fabulous. Right. We're just about done. I've got one question. Well, it's not really a question, but it is a question, if that makes sense. John, to you first. If you could have had one piece of advice when you first started your business connected to year end and that piece, what would it be?
I think for me, it's about getting information. I think the first thing I said, actually, it's about getting information in early. I think, and we're getting there now, but if you don't give information to your accountant early enough, it doesn't give us the opportunity to do the planning that we want to do. So the bit of advice that I would have had is exactly that, and it stays the same.
Yeah.
And I give that out to every client now.
Fab. Andy, anything?
Totally agree with John. And I would say also is make sure that the information you put into your system is accurate, because the more accurate it is, the quicker you can get things done. And again, tax planning.
Fabulous. Right. Okay. So actually there's a challenge for you, as the viewer and listener. From what you've heard today, which one year-end preparation tip will you take away and implement this financial year? We'd love you to share this with us on our socials. That's all for today's episode on making year-end accounting easier. Thanks to John and Andy for sharing their expertise, and thanks to you for listening. Don't forget to like, subscribe, and leave us a review. It'll really help us reach more growing businesses like yours. And if you've got any questions or topics you'd love us to cover, drop us a message on any of our social media channels or email us at info@cass-online.co.uk. Thanks again for listening, and we'll catch you next time on Giving You More Than Numbers, CASS's business support podcast. Thank you.
Thanks for listening to Giving You More Than Numbers. Subscribe for more business insights from Team CASS.